What's going on with volatility right now? I'm going to walk you through it. I'm Mark Sebastian from Trade to Close, and let's dig in. So, what we're looking at on this chart is the volatility index, sometimes called the VIX or the fear gauge. And it is at the highest levels that it has been in all of 2024, the highest that it's been since October. It is broken out of a pretty big trend that dates all the way back to December when we were seeing higher highs and higher lows. And now we've broken out of that level and are into completely new territory. But the last 3 days since it exploded, the volatility index has actually pulled back a little bit. It's back to 18. So does this mean volatility is relaxing? No. I want to point out the last time we saw something like this. Delete these. The last time we saw something like this was in October. And what do we normally see? I'll hone in. You get a rise, you get a little bit of selling, and then you get some follow through. Look, rise, little bit of selling, follow through, little bit of selling, follow through, a little bit more selling, and then you peak out. And it's not just what just happened last year. If I go back to COVID, even in COVID, this is 2020, we had this huge pop, and then they pull back a little bit, and then we get another leg higher. Now, I don't think volatility is going to 75, but I think it absolutely could make a move at something like 30. So, why am I so certain that we have the ability to rally in volatility? Well, one, I just walked you through historically how this thing moves. The second piece is VIX futures. What you're looking at is the VIX futures, that's the blue, and you're looking at the green line, which is the volatility index itself. And this formation, where the volatility index is trading above the front 2-month futures and in line with the third, is called partial backwardation. And that just simply means that the index is trading above the futures, but the futures are still trading subsequently higher with each passing month. This formation typically means we're going to see wild moves. We're going to see wild moves. Right now, with the VIX at 18, we're pricing in about a 1.125% move a day. We have not had a lot of 1% moves open to close, but intraday, we've seen wild intraday swings. So one of two things is going to happen with the volatility index. Either we're going to get a really wicked rally and VIX is going to crash lower, or we're going to get we're going to get something ugly. The market's going to tank and we'll end up in a formation that looks like this, where the VIX is way above the futures and the futures get actually subsequently less expensive. This is called full backwardation. When you see full backwardation, that means the market is panicking. We're not in panic mode yet. We're going to get a wild move. Could be up, could be down. My belief, based on what I'm seeing in SPX and its inability to hold any rally, is that the next move is likely lower. I have the 100-day moving average at 49.30. I think that is probably a level that we're going to touch. Based on where the VIX is pricing, that's a 1-day move. And what is going to cause us to make that move? Funny you should ask. It's not geopolitical. It might be a little bit of earnings, but it's probably most likely bonds, which looks sick. What I worry about, this is IEF, it's the 7 to 10-year bond trust. What I worry about is the floor falling out. Put IEF on your ticker screen. And if that starts trading below 90, the market is going to fall apart. So that is what is going on with volatility. If you want to get our updates in real time, like and subscribe. If you've got questions, leave a comment, and make sure to check out our free newsletter. Comes out 3 times a week. Totally worth reading. Give it a try. You won't regret it.